Okay, next up we have Applied Digital Corporation. So this stock is bullish. It's above this moving average. You can see there's been a good chunk of bullish momentum all the way from roughly I'd say $3 to, all the way up to like 10.50, almost 11. Yeah, I mean it did hit 11. So just breaking down the technicals here. You can see this area is significant up here, right around the $11. And then price did gap here, and it looks like it kind of wants to fill this gap, so it might continue lower. And then based on today as well, it gapped upwards a little bit, but now is bearish engulfing. So I think this does want to still go lower. Your next area of liquidity, if it does decide to come up, is right here. So which is exactly where price hit and now is selling off. So I do think this wants to keep going lower. Would be interested in a buy if price respects this moving average still and this gap here. So somewhere in here is most likely where price will go, and then I'd probably be considering a buy if everything else, if the structure calls for it, because right now, I mean, we're just super bearish, right? As far as hitting $11, since then it's been straight down. There's been no pullbacks, and structure is just completely bearish. So what I would need is I'm actually going to mark. Price loves whole numbers, so you always want to mark your whole numbers, and then you have an idea. So it's not just lines on a chart, it's actual prices. So then it can make more sense to you. So we know $11 is huge, so that's pretty much the high. And then we have to figure out what the next low is, potentially. So it's about $5 for this stock. Oops. So we'll put 5 in here. Let me know what to look for. So again, yeah, right above this zone. So I like that. I like that that correlates well, price to this area. So we'll see what happens when price comes down to about $5. If it starts, and you can see that this moving average will probably catch up to it too and function as support once price hits this $5 mark. So this is all aligning pretty well. And then if you want to, I just want to see on this weekly. So as far as this weekly goes, maybe the daily's better actually. So if you look here, I want to see how this lines up. So currently it is actually at the 618 level, so that's huge. But if we want a more significant retracement, it would be on the weekly aspect, which puts us right here. That was the last time on the weekly that this retraced. So it's a little bit deeper than 618, but depending on what'll happen, and this was the previous liquidity zone. And what could happen is price, as it comes down, it creates a new lower liquidity zone. Well, actually, it is a new lower liquidity zone, but it's above this previous one. So it could be between $5 and $5.50 here, which puts us right at this 618 level. So what could happen too is price dips into this, dips below the 618 level into this area, gets bought up right away. So it doesn't have to completely stop at 618. It can go a little bit further, but it's a good price to keep in mind. So 550-ish is the 618 retracement, and then like I said, $5 is kind of your whole level. So I would actually put this at 550 just as of right now. I just have a feeling looking at this, I think 550 is going to be our target for entry, which based on this right now, this zone, it doesn't mean anything yet, but I think it will. But we'll leave this price here. So yeah, you got your 618 retracement of this entire bullish segment. So this can still be very bullish. It's just pulling back. Super healthy for price to do that. Today's bearish engulfing candle, so it looks like there's a ton of momentum, and then odds are by tomorrow this will have hit 550, and then we'll see how this finishes off the week. And then I would be looking for a possible buy entry. And if we break it down, so that like this is the end of the month here, so we'll say by the end of the month price hits 550 and starts creating some support there, and there's a liquidity area. This is where the bulls want to buy, around 550. This moving average catches up, all that. Then you're looking for a long position back up to, oops, that's a short position. We want a long position all the way back up to, oh, did I move these around? Oops. There we go. So confusing. I don't even look at the things, I just know the spot that it's in. So yeah, so you're looking back, I would even target, I mean, I would target this zone, just be safe. I wouldn't target the top, I'd target the bottom, right at 1025. And then, yeah, you literally just wait for price to create its own liquidity zone right around 550 here. And then as price, you know, right now, if you drop it down time frames, you can just see, actually this one's out, well, this one gapped, but it's still way below the 30-minute moving average. But what's going to happen is price is going to come down to 550, let's say, and then reject a little bit, and then come up, and then reject a little bit lower, which is actually a higher low versus this one. And then you're looking for an entry like this. So odds are it'd be something like this. Once structure changes, you have to wait for two things. You have to wait for price to hit this area of liquidity, which I think is around 550, and then you have to wait for structure to change on the lower time frames. That signals that the bulls are back and we get higher highs, higher lows, and the structure setting up on the lower time frames, which tells us that, you know, it's going to continue on to the larger time frames and that our trade is valid and you know, probable. So this is what I'm waiting for Applied Digital Corp here, and you know, I'm super patient. I'm gonna wait till, you know, this gives me exactly what I want. No rush until then. Let price come down to 550, create liquidity, and then look for that entry, and then yeah, look for close to a double-digit risk to reward based on this. And that's the cool thing. Once this starts rejecting 550 and starts creating that structure back up, then you can cinch your stop up, you know, right below all the previous wicks, and then move it to break even as soon as you're, you know, as soon as it's bid and profit, you just move it to break even, and then this is a risk-free trade, so it's just positive free roll, which I like, and that is my that's my goal here. So, and hey, if price smokes 550 and just keeps going and there's no rejection at all, and it goes into this area, then we look for the same possible scenario. We just look at it at a cheaper price, you know, $5, 450 kind of thing, and then yeah, we just let that play out and see. This is next month's play. And we'll see what happens. So that's APLD. Let me know what you guys think. Let me know if you have any questions in the comments. I'd be sure to answer them as soon as possible, and we'll follow up on this if it's something you're interested in, and I'll see you in the next one.